Hello, let's learn how to use StationPEG's core analysis items. StationPEG offers various practical analysis items. Users can complete basic corporate analysis by focusing on core items. After signing up, click List of Reports to write a report. Click the Domestic Company Analysis or Overseas Company Analysis button to enter the report creation screen. Enter the required items and click New Report. On the report creation screen, click the Settings button to adjust the analysis items. Selecting Standard Analysis loads default items. Use Select Item to keep only what you need. The core analysis items, frequently used in StationPEG, are as follows: Performance Trends, Performance Forecast Input, Company Revenue Model, Reason for Performance and Basis for Performance Forecast, Economic Mode Analysis, Weighting of Profits Quality, Weighting of Critical Trigger, Comments on PEG Interpretation, Comments on the Possibility of Additional Purchase, and Post-Evaluation. Of these, Performance Trends and Performance Forecast Input are for calculating PEG, and the rest are for interpreting PEG. The date of analysis and stock price on the date of analysis are the basis for all data analysis. Go to List of Reports and Domestic Company Analysis or Overseas Company Analysis to enter the date of analysis. Set a past date to analyze and learn PEG through real cases. Studying past cases is the most effective way to learn corporate analysis using PEG. Click the editing pen in the analysis target date information to enter the stock price. Enter the stock price as of the analysis date. You can also change the analysis target date here. Please refer to explanation for details. Stock prices may be displayed differently depending on the country. If the price shows decimals, select the unit before entering it. Use Performance Trends to enter time series data manually via editing pen. Select the start year and end year by referring to explanation. The start year is the peak stock price year, or 5 years before the year prior to analysis. The end year is the year before analysis, or 1 year earlier if data isn't available. For example, on April 14, 2022, if 2021 data is missing, use 2020 as the end year and enter 2020 EPS. Manually enter the analysis period and data. Use meaningful intervals to assess patterns. If unclear, choose the last 3 or 5 years. Check the currency unit. Performance forecast data is essential data for calculating PEG. Click Editing Pen to enter it. The input method varies depending on whether there is a consensus. The current screen shows the input screen when there is no consensus. If analyst consensus is provided, you can adjust the whether there is consensus button to yes. Click Explanation for more detailed input instructions. Expected 3-year EPS can be found in Corporate Analysis Consensus on most HTS or stock info sites. If a consensus exists, manually enter the expected performance. If no consensus is available, assign appropriate EPS growth based on past trends and outlook, considering potential reversals. This screen shows PEG results. After entering performance data, PEG is auto-generated. StationPEG calculates PEG even for deficit or turnaround companies, unlike other systems. But to interpret PEG properly, it still needs qualitative analysis, like the company's revenue model, reasons for performance and basis for performance forecast, economic mode, profits quality, critical trigger, and the possibility of additional purchases, etc. The company's revenue model is the basis for interpreting the quality of profits and PEG figures. The size and sustainability of a company's revenue depends on its revenue model. It is a very important analysis item. Use editing pen to enter it. Enter the company's revenue model in opinion, referring to explanation. Start by checking product or service sales ratios. In last year's business report, high volume product sales usually boost profits and stock prices. AI can help, but AI can give different or inaccurate answers. Ask for summaries if too long. And check for errors by comparing multiple AI tools or reviewing the data yourself. If there is a lot of content, it is helpful to summarize it. This is where you enter revenue model sources. Click editing pen to input. Data quality drives analysis quality, but collecting it can be hard for beginners. StationPEG offers easy access to listed company data worldwide. Click explanation to choose a country and access its data sources. Access listed company data from over 30 countries in one place with StationPEG. It saves time, though foreign data sources may rarely change due to updates. Save time later by pasting the name and URL of your data into the sources field. It's simple. Just copy, paste, and save. This is the sources section. Click saved URLs to revisit data anytime. Organizing data during company analysis is often a tedious task, but this keeps it simple. Reasons for performance and forecast basis are key to understanding PEG. Refer to explanation and enter your opinion in the input field. Explain key causes of sales or profit changes over time, and identify any core drivers. Assess if past trends will continue or reverse, with supporting reasons. Determine if a profit cycle or new growth momentum has begun. Use analyst reports and news for reference. AI can help but may sometimes be inaccurate. Cross-check results and verify data yourself. Economic moat analysis is key to interpreting PEG. Strong moats make PEG more reliable. Refer to explanation and enter whether an economic moat exists and its duration. AI can explain economic moat, but ask using traditional classifications to make judgments accordingly. You can ask about the duration, but it's best to assess it yourself. Weighting of profits quality is a key factor in interpreting PEG. Profit quality is judged by the user based on profit size and business sustainability. It's broader than accounting profit quality. Refer to explanation and assign a score from 1, lowest quality, to 5, highest quality, based on your judgment. Turnaround companies gain high weight, 5, despite low accounting profit quality. Companies with poor quality profits are not worth buying, no matter how low their PEG ratio is. A critical trigger is a special circumstance that occurs in a company or external situation that warrants the purchase of a stock. Weighting of critical trigger is a key element needed to interpret PEG. Refer to explanation and assign a weight of 1 for the case where there is no critical trigger, or the lowest intensity, and a weight of 5 for the case where it is the highest. Critical triggers include changes in policies and regulations, the arrival of a profit cycle, the end of a large investment, the development of a new product, the expansion of a business network, the existence of an economic moat, existence of a large transaction amount, and the end of an economic crisis, etc. Asking AI about individual factors of critical triggers may provide helpful answers. However, it is best to cross-validate between AIs and check the data yourself. PEG is a compelling valuation metric. With the right interpretation skills, it can be a powerful tool for successful investing. PEG interpretation opinions are written by users after making their own judgment by referring to explanation. In StationPEG, Both positive and negative PEG values are calculated. A positive PEG typically suggests potential stock price growth, while a negative PEG indicates a possible decline. However, market reactions may lead or lag these indicators by approximately 6 months. Generally, a stock is considered attractive if its PEG is below 0.75 and its PER is below 40. However, ideal PEG ranges can vary significantly by country and industry. For more information, please refer to explanation. Even if PEG is within the buying range, ensure it is supported by a profit quality weight of 5 and a critical trigger weight of 5. It's recommended to base your buying decision on 30% PEG value and 70% combined profit quality and critical trigger. PEG helps identify buying points, but does not signal when to sell. Selling decisions depend on investor experience or other factors. Secure profits after significant gains. Investigate if PEG values become excessively high or low. Always refer to PEG investment limitations and precautions in the PEG introduction menu for effective use. Comments about additional purchase possibilities help avoid errors in interpreting PEG. Refer to explanation. Indicate your opinion on additional purchase possibility, and briefly state the key reason in the opinion field. Buying more stocks of a company with strong revenue models, good profit quality, and PEG in the buying range can boost your returns. But even if growth and PEG are favorable, avoid additional purchases when stock prices have risen significantly, as such stocks often experience prolonged declines due to profit taking, resulting in high opportunity costs and potential losses. Checking if the stock price allows additional purchases helps minimize investment errors and creates an effective investment strategy. Post-evaluation provides feedback on corporate analysis and investment. Click Editing Pen to start. Refer to description and enter the date and stock price for result analysis. For purchased stocks, input the trading date and purchase price. Evaluate corporate analysis or investment performance based on fluctuation period and rate. Ask AI for reasons behind stock price changes to aid your analysis. Freely share your opinions and feedback. Post-evaluation helps improve investment habits and boosts returns. To summarize, you don't need to analyze all StationPEG items. Mastering key ones is sufficient. If you faithfully analyze the core analysis items, you'll arrive at a company whose stock is set to rise. AI simplifies company analysis, but errors can sometimes happen. So cross-check using multiple AIs and verify data personally. Prepare data beforehand to get more accurate responses from AI. Combining AI with StationPEG enables systematic analysis of listed companies across over 30 countries. We support your successful corporate analysis and investment. Thank you.